Hey there, Nick Inman from VolumeProfileTrader.com on Tuesday, August 28th. S&P markets continue to flatline, still waiting on Bernanke for Friday. So I think this is, continues to be, as far as the week leading up to Friday, pretty low-key. Don't expect too much. Don't expect a breakout out of this range until we learn what Bernanke is going to say. Even if he doesn't say anything, that's going to cause the market to do something. So whether it's, the market's trying to bake in some QE3 and Bernanke says, yes, we're looking at that, or no, we're not, you're probably going to see a 20-handle S&P move. Whether it's the end of this week or the beginning of next week, you're going to see some type of vertical move, and we'll just have to wait and see. Trend remains higher, up, down, up, new highs. Let's see if we can continue higher. What I did was with those blue lines, I just marked the bit of this high volume area here. It's being pretty good support, especially from Friday. Haven't touched it yet since. So that's kind of your bogey, especially for your longs, and there's nothing wrong with protecting your positions with potential trade below there. One thing to note is this 1412, 1414 level on the S&P futures. Still resistance, but we're still above this month's point of control, so that's okay. That's what you want. Just realize that we are building, I connected the lows here. If I connect the highs, it looks like we have a little triangle pattern forming. Not saying that this is going to lead to anything if, the market's waiting on this. However, just realize end of month is coming. The beginning of next week is the first part of the month. So Friday's the last trading day of this month. So just be careful and be prepared. Be ready for both sides of the market. And if that means just holding some more cash than normal, that's fine too. I'm not really going to get too much in depth. Nasdaq, same thing. The Dow a little bit weaker, so that's something that you want to note. But generally, same thing. The Russell actually pretty strong, but it's relative. Russell hasn't made new highs, so that's just something you want to be aware of. And the volatility index, I think on the hourly chart it says it best. For some reason, and I have to be honest, I'm not sure what that reason is. I have this 1575 to 16 zone marked off. Well, it's doing a pretty good job. Once we busted into it, it was support yesterday, support today. People are buying the weakness on volatility, and one way that we did that today, that I posted, or at least I did it, I went back to the Qs because it was extremely cheap to do so. 68 by 67 put spreads expiring this week. They were 20 cents each, so I could get what, a 4-to-1, 5-to-1 payout if these work out. And it essentially what it does is for the Qs, it protects my portfolio if the Qs drop below this month's point of control. So that's kind of what you want. And on Thursday, I'll probably do the same thing. What I'll probably do is just roll whatever the value is of those puts. If they're worth anything, I'll roll them out probably to the same exact strike, 68 by 67 put spreads expiring the following week. Because what that will do is it will set me up to be protected up until the jobs number for next Friday, the start of the new month. And that's what you want. You want to be positioning yourself after a market run up like this. If we pull back, you want to be protected. If we keep going, you lose a little bit of money on that hedge, but overall you're still net long. And I think that's what's important. So let's go into our trades today. Bristol Myers completely flat on this now. This was a good trade. Bought it sub 32, around 31.70, 31.80, something like that. Scaled out into strength today. What I was short 33 puts and I was long 30 puts. So essentially I had an in-the-money put spread. That short put eventually came at the money, and I collected $1.25 for putting on that position. I bought it back for 49 cents for every spread I sold. So essentially, it was a pretty good trade, and it was actually Bristol Myers dollar-wise may have been the best trade of the month for me. That or Las Vegas Sands, one of the two. But this looks pretty good. We're back at basically where we sold off from, off of whatever this was here. Those are just kind of easy trades. It happened a couple of weeks ago or months ago on Procter and Gamble. It's just some of those things that happen. Anyways, let's go on. I guess we'll go to MasterCard next. MasterCard, this is basically flatlining, which is fine, but it's weak. This may roll over and this may stop us out. So what we're going to do is we're going to watch this, keep a stop under 420, 421, somewhere in there. If you want to keep your stop under this big buying bar, that's fine. I don't necessarily think that's necessary. Just watch this. If we get some type of selling that starts to increase on MasterCard, scale out of some. Right now we're just around a break even, so this isn't even really a big deal. But overall what we're expecting, or what we want, is a breakout and a test of at least 435, but ultimately 445 or so, these highs here. We want to see these lows hold and then continue higher, push above this monthly point of control. So we'll have to wait and see, but we are positioned to the long side, and as long as we do stay above these swing lows, and I think we're okay on MasterCard. Even though it is kind of weak, we're going to go ahead and stick with the trade because it is outperforming relative to the market. So we'll leave it at that. New position today, LinkedIn. Got long let's see the exact price. 106.90 is the exact price we got long. It's working out. I said keep an eye on this, and pretty light volume, but relative to what we've seen the last couple of days, and we are seeing a little bit of a breakout here. As far as the target, let's try to get to these swing highs, and we'll kind of go from there. Just realize 109.50, it may be a little bit of resistance, but would like to see this thing push up towards 112 or so. Just kind of looking for a base hit here, staying a little active. We can define our risk pretty easy on LinkedIn. If it drops below this base right here, then why be long? So we're just going to stick with that and see if we get a little more upside. Alright, it's pretty low key. Silver hanging in there. I'm going to bring up the SLV. What you're seeing, still making higher lows, no longer a higher high. We'll have to see if this wants to continue. Bernanke will be the tell for that. Similarly, GLD, just hanging around. This is the point of control for the year on GLD. But on the gold futures, we're at the top of this high volume area. Notice the point of control for the year was resistance. Then we see a breakout on 3 good volume bars. Even today, the volume was average, and the only sell day was below average. So that's a positive, I suppose. Keep an eye on these lows today. If the market or if gold tries to hold these lows, then I think you're okay. We are long. I did scale out of some gold today, which I don't think I posted on Twitter. Well, I did when I did it, but I recapped the day on what we did, and I don't think I posted that. I bought some gold last Monday, and the price was, let's get down the GLD because that's what I bought. Alright, the price was just above 157. It was at the end on Monday, and it continued higher. Well, guess what? We had a nice little pop. I'm going to go ahead and scale out, lower my risk some. We are involved in some out-of-the-money call spreads, 164 by 167, so it gives us some additional upside. What we'd be looking for is a test of this high volume area here if we can consolidate and continue to go. We have till the, let's see, the 21st of September for that to happen, so about 4 weeks or so. Not too bad. 3.5 weeks. Gives us an opportunity. We'll see if this is truly a breakout. When you look at gold futures, it does look like a breakout. So we'll have to wait and see. But I kind of do like this to continue higher. Of course, Bernanke can shatter that pretty quick. So really, that's it. I hope this helps. I hope you're trading pretty good for the month of August. It's other than that vertical move that we did have, it's been pretty tough, pretty quiet. Not many losers that we've had, but we have a few positions that are just kind of flatlining right now, and that's what we want, is to avoid those flatliners to become big losses. So if it starts to turn on you, if it starts to break support, then go ahead and ditch the position. You can always buy it back. All right, so make sure your portfolio is protected, and if that means raising a little cash by getting out of some positions, you don't have to sell out all your positions or all of whatever specific position, but maybe sell half of whatever, just to raise some cash so you can always deploy it again, whether it be a short opportunity or if the market wants to go lower. I just want to look at Apple, see what it did today. I am still involved on Apple, very small position, so I'm not even really paying attention to it. I guess I'll keep you updated on that though. So anyways, take care, have a good night, and I'll talk to you tomorrow.